Hi traders, welcome to another edition of Weekly Forex Forecast on FSLess, which is for 29th of June to 3rd of July 2020. In this week, I'm going to share with you guys the list of currency pairs I am watching out for next week, should in case of trade breakout opportunity. If today is your first time viewing my YouTube channel, you are welcome. And then do not forget to like, share, put a comment down, hit the subscribe button as well, click on the notification bell so whenever I release educational content of this kind, you're gonna be the first to be notified. Remember, forex trading is an high risk investment as well and high reward investment, so do not trade with the money you cannot afford to lose. Here are the list of currency pairs I am watching out for next week. I have the British pound sterling paired against the USD. I have the Euro paired against the USD. I have the USD paired against the Switch. I have the US crude oil, and then we're gonna wrap up things with the XAU paired against the USD or the gold. So let's dive into the weekly forex forecast right now. The first currency I have right here is the British pound sterling paired against the USD, and then we can see right here our price made a bullish rally upward right here before we had a bearish downward rally here, and then we can see how the trend made a short consolidation at the face region right here, and then we can see our price carved a bullish engulfing bar right here. That was a Monday first bar which carved a bullish engulfing bar, and this is one of the reasons how I always emphasize on, if whenever you figure out a bullish or a bearish price action signals, it doesn't mean you have to buy or you have to sell. You have to make sure you have a lot of confluence factors in conformity to your trading signal, that is your signal bar. So we can see how the bull made a short rally right here, and then the bears comes in to reverse this trend in a bearish trend right here. So it means this bullish engulfing bar failed right here, whereby it trapped a lot of bulls, a lot of buyers in this market right here. And then we can see our price broke below this key level structure right here. That is a key level structure which acts at a price level of 1.24668. And then again, if I should construct a trend line right here, we can see we had a rejection right here, and then we had a swing low right here, and then a swing low of this failed bullish engulfing bar right here. Friday candle closed below this dynamic support trend line right here, and then we can see how a doji was formed. This was a rejection of this key level structure. Not only a doji was being formed, we can see as well this bar right here carved a bearish engulfing bar which closed below the key level structure, which acts at 1.24668. So let's check out on the higher time frame, that's the weekly and the monthly chart, so we can get the whole picture of this currency pairs right here. Here is the weekly chart of the British pound sterling paired against the USD, and what we can figure out right here, it's a strong bearish trend. So I'm gonna zoom in on this currency pair right here. So right here you can see we have 3 consecutive bearish week. We are right here we have a bearish week. Not only a bearish week, we had a bearish prayer which resulted the weeks into a bearish trend, and then the next week right here also had a bearish prayer at the top of the bar formation, and then last week bar right here you can see the price made a swing to this high right here, and the bar lost all its volume or the pips right here downward to this zone right here, whereby price carved a bearish pin bar right here, which is an indication of a strong bearish interest right here. So next week I wouldn't be surprised if the price of the British pound sterling against the USD drastically depreciate in value to the next key level structure, which acts at the price level of 1.20845. You can see that right here. So let's check on the monthly chart as well. Here is the monthly chart of the British pound sterling against the USD, and then I'm gonna zoom in properly so we guys can figure out the whole action right here. And the year right here you can see the month of June had a lot of bearish prayer. We can see right here how the month of June had a swings to this above, a little swing above the key level structure, which acts at a 1.27547. that's a key level structure right here, which acted as a resistance for this bar right here. And then we can see how June candle made a retracement backward, below the next key level structure, which acted at the 1.24668. We still have a few days to go in the month of June. So if the month of June can actually ensure this kind of bar formation, then it's a signal, it's an indication next month has high probability to result into a bearish month. So I'm going to navigate back on the daily chart now so I can make the conclusion of this analysis. So back on the daily chart of the British pound sterling against the USD, we all know in a symmetrical triangle, when price keeps on fluctuating through a symmetrical triangle, price can either break to the downside or to the upside. And then we can see right here in this case, price broke out of the symmetrical triangle. That was a last week Friday bar. And then we can see the key level structure, which acts at the 1.24668. So next week, I want to see what the bulls and the bears have to get done at this zone right here. Maybe the bulls are actually going to come in to defend this swing right here and then ensure a daily close back into this dynamic support trend line right here, and then ensure a daily close above this key level structure right here. And then if that should occur, it means the action which occurs right here is definitely a false breakout. And then if the bears comes in next week, whereby they made the rotation downward right here, and then the next key level structure whereby the bears have to break through is the key level structure which acts at the 1.20845. If the bulls fails to come in at this zone to defend this key level structure, which was a support for the swing low right here, then it means the bears are willing to retest the next key level structure, which acts at the price level of 1.17774. Alternatively, if the bulls comes in at this zone right here, then it means the bulls are not giving up in this trend, and then this should turn this key level structure right here into a strong support key level base. Then I wouldn't be surprised to see the bulls make a rotation of price to retest the key level structure, which acts at 1.24668. So take note, resistance lies at the key level structure of 1.24668, whereby the support level acts at the price level of 1.20845. So next week, I'm going to patiently wait to see what the bulls and the bears have to get done at this medium right here. The next currency pairs on our watch list is the Euro paired against the USD. And we can see right here our price carved a bullish engulfing bar, and then price made a short bullish rally upward. And then what happened next? Price made a bearish downward trend, having a close below the key level structure, which acts at the price level of 1.12361, which was as well resistance level for this downward rally right here. So I'm going to navigate on the 4-hour chart so I can show you guys what actually happened on the 4-hour chart. Here comes the 4-hour chart of the Euro paired against the USD, and then we can see from this swing right here, it was a bullish rally. Before price got to this medium right here, price carved a head and shoulder right here. So here's the head right here, the left shoulder and the right shoulder, and then we had the neckline right here. So the neckline was the support trend line of this narrow wedge right here. You can see the transformation of this wedge right here, whereby we add the resistance trend line rejecting of price right at this medium right here. So there is a narrow bullish flash in this bullish rally trend right here, and then we can see our price carved a bullish bar right here. That's a bullish pin bar right here. Price broke out and the price made a retest downward right here. So this dynamic trend line right here is still acting as a support for this trend right here, and then we can see how the key level structure, which is at the price level of 1.12361, is still as well rejecting price at this zone right here. So price right now is currently going through a state of consolidation at this medium, and consolidation at this medium right here can actually turn into a breakout of this key level structure to an upward rally. And then alternatively, we can see we had a swing low right here. If price should make a rotation downward, whereby price keeps on respecting this dynamic sub trend line right here, then it means this currency pairs right here have high probability to transform into a double bottom right here. And then we can see the swing low right here. If the price should make a rotation to this level right here, then price can actually find a support at this level right here. Then this can turn this zone right here into a double bottom, which can serve as a rejection of price for this trend in an upward bullish rally. But take note, the bulls have to clear off this key level structure, which acts at the price level of 1.12361. Alternatively, if the bulls failed to defend this level right here, and then the bears successfully make a rotation backward into this channel right here, into this narrow wedge, then it means this is actually a false breakout on the higher time frame. So let's check on the weekly chart and the monthly chart as well. Here's the weekly chart of the Euro paired against the USD. We can see constant bearish retracement, bearish prayer at the swing high of all these bars right here. You can see that, which suggests more bearish trends to come. So let's check on the monthly chart. And here is the monthly chart of the euro pair against the USD. So let's zoom out. Okay, zooming out right now, you guys can figure out the rally right here is currently in a state of a symmetrical triangle. Price is fluctuating through a symmetrical triangle. We all know in a symmetrical triangle, price can either break to the upside or to the downside. So I'm gonna zoom in on this chart so you can figure out the price action properly right here. And then here it is right here. You can see how this bar lost 1/3 of its bar formation. This was the month of June. And there's something I want to show you guys. I'm gonna zoom more in on these currency pairs right here. Okay, good. Right now you can see right here we have a long-legged doji right here. So a close above this long-legged doji right here have high probability to transform this trend into a bullish aggressive rally, and then a break below this swing low of this long-legged doji right here has high probability to transform this trend into a more bearish aggressive rally. In the doji, whenever price close above, it has high tendency to transform trend into a more aggressive bullish rally. Likewise, if price should break below the low swings of the doji, it has high probability to transform such trend into a more bearish aggressive rally. So let's check back on the daily time frame. So next week, I want to see what the bulls and the bears have to get done at this medium right here. So a daily close above this key level structure, which has at the price level of 1.12361, would suggest a higher movement of bullish rally to retest the next key level structure, which acts at the 1.14130. Alternatively, if the bulls failed to have a close above this level right here and the bears comes in, then it means the bears are willing to retest the next key level structure, which acts at the price level of 1.11430. And this may open door to the next key level structure, which acts at the 1.09925. And that is if the bulls fails to defend price at this key level structure right here, which was a key level structure for this high swing right here, which rejected price in a bearish downward rally right here. So I want to see what the bulls and the bears have to get done at this zone next week. The next currency pairs on our watch list is the USD paired against the switch, and we can see how price made a rally right here. There is a fluctuation of price before price broke downward, and this was a symmetrical triangle right here. So we can figure out same pattern seems to be transforming at this zone right here. Now you can see right here swing high right here, we are the downward right here, and then we can see how this key level structure, which acts at the price level of 0.93752, rejected price with a strong bullish reversal bar. That is a bullish pin bar. We had a swing low right here. We constructed our dynamic trend line right here. You can see it right here. After there was a bullish pin bar which capped right here, price made a bullish rally upward to this key level structure, which was a 0.95084. But since then, price resulted into a state of consolidation, and then right now price broke downward, which means this bullish pin bar right here is not very reliable. If this is reliable, we shouldn't figure out price making a rotation back into this medium right here. So right here, it's a sign of bullish weakness, and then I wouldn't be surprised to see if the price of the USD drastically depreciate in value. So what I'm looking at for next week is if I can figure out a strong bearish price action signal right here to aid a sell signal downward, and then as well to try to go along to the direction of the previous trend, which is a bearish strong trend right here downward. Price is currently having a bullish rally, and then we can see the key level structure, which acts at the price level of 0.95084, which was a swing low for this rally right here, which rejected price in an upward bullish rally here. Actually served as a state of rejection for price right here. There was a last week bar formation of Friday, and then Thursday there was a depreciation in bullish momentum right here. Trading is all about repetition of past historical record on the trading charts. Right here serves as a point of interest for the bull to put price upward or for the bears to put price downward. But nothing is guaranteed in this business. So before you take a trading decision, you have to make sure you understand what you're trying to do. So a daily close back into this key level structure right here, that is a key level structure of 0.95084, would suggest more bullish rally upward to retest the next key level structure, which acts at the price level of 0.95972. And I take note, we have a dynamic resistance trend line right here, which the bulls have to clear off before we can figure out a more bullish upward rally. Alternatively, next week nothing is possible in the market if the bears comes in to defend price at this level right here and then ensure a daily close back into this dynamic support trend line right here, then I wouldn't be surprised to see the price of the USD drastically depreciating value to the previous key level structure, which acts at the 0.9372, and then this may open door for the price of the USD to drastically depreciate in value to the next key level structure, which acts at the price level of 0.92437. That is if the boost failed to defend this key level structure, which acts at the price level of 0.93752. So I'm gonna patiently wait to see what the puts and the bears have to get done at this zone next week to see if I can join this downward trend right here. Maybe if we can figure out a very strong bearish prayer right here, or if we can see, alternatively, if we can see a bullish rally upward right there, then I'll patiently wait to see what the puts and the bears have to get done at this zone right here. Next on our list is the US oil. Due to the massive no request messages I have gotten from my subscribers right from YouTube, Facebook, Instagram, with the request they want me to make analysis on the US oil and some stocks as well. The truth is I monitor a lot of currency pairs, a lot of markets, both from the cryptocurrency market, the metal market, the energy, or the major currency pairs and the minor currency pairs as well. Stocks like the Tesla, Apple, and Amazon stock. These are all the current market I monitor. So it's not going to be easy for me to give analysis on all these currency pairs one by one, and that is the importance when you get access to my free webinar class 3 times in a week. In this webinar, you have the access to ask me questions, speak with me one-on-one, ask me whatever market you want me to give analysis on, then I'll be very, very happy to give analysis on short currency pairs. So make sure you click on the link at the bottom of this video right now so you can get access to my free webinar 3 times in a week and then ask me a question directly. So energy traders, here's the analysis on the US oil. We can see how this US oil have been in a bullish rally, and then right now we can see the US oil is in its resistance level. There's a key level structure which acts at the price level of 42.39. Some of you might have been wondering, how did I figure out this key level structure? Well, I figure out this on the higher time frame, that is a weekly and a monthly chart. So I'm going to navigate on the weekly chart and the monthly chart so I can show you how I detected this key level structure. So here's the weekly chart of the US oil. So I'm going to zoom in right now. And then you can see right here, we can see how this key level structure right here was served as a rejection zone for the bullish rally upward right here. And then right here, and then even right here. So as a key level structure right here, and then right there. So if we trace this key level structure to this zone right here, we can see this is a resistance for the US oil as well. If we check this out on the monthly chart frame, and here comes the monthly chart, we can see the key level structure right here as a support. That was a swing low in the year 2019. Same right here, swing low in the middle of year 2017 and then 2018. And then right here we have this key level structure right here. So this is a key level structure we have to pay attention to. We energy traders, if you are trading the US oil, we have to pay a close attention to the price level of 42.39. This level right here have high tendency to reverse the US oil in a downward bearish rally next to the key level structure which acts at 35.16. Also take note of this long-legged doji right here. Our price, this bullish bar right there, a very healthy bullish bar close above it, which suggests a more bullish rally for the US oil. So the price action right here and then right here has high influence for a more bullish rally than the bearish influence right here. So I'm going to navigate back on the daily chart frame. Here comes the daily chart once again, and we can see the rejection right there, the double rejection bar right here, two bullish bar right there, which resulted into this bullish rally upward right there. So don't be surprised if the price of US oil makes a rotation downward right here to the next key level structure, that is 35.16, and then price actually find its support right here. This key level structure right here is also a very key level structure we have to pay close attention to due to the fact it's a multi-year key level structure. And that is why price made a reversal downward right there. So I wouldn't be surprised if the bears make the rotation downward right here and the boost comes in right here to build on more momentum to break out of this major key level structure which acts at the 42.39. Alternatively, if the bulls failed to defend this key level structure right there, then I wouldn't be surprised to see the price of US oil drastically depreciate in value to the previous key level structure which acts at 29.17, which was a high for the price downward right there and a little rejection right here. So next week I'm gonna patiently wait to see what the bulls have to get done at this zone, or if we can figure out a bullish price action right here, then I would love to wait for a retest right there. So I'm not gonna take any trade decision here next week. I don't like to take this trade at the middle, but I will be interested to see what the bulls and the bears have to get done at this zone and then at this zone. Okay guys, it's time we wrap up our analysis with the gold, that is the XAU against the USD. So we can see right here, price of the gold right here found a rejection at the key level structure of 1748.515. If you watch my last weekly Forex forecast, I emphasized on the significance of this bullish reversal bars right here, and I said gold on the long time run has high probability to transform into a bullish breakout, and then this occurred according to my forecast last week. And then right there we can figure out an inverse head and shoulder which contributed to the upward bullish breakout of this trend right here. And then we can see how Friday bar carved a bullish engulfing bar at a rejection of the key level structure, which was a high right here and the resistance right here. So this is a major key level structure which was been broken last week. And then I'm gonna show you guys a lot of price action on the 4-hour chart, right? And then here comes the 4-hour chart of the gold. So I'm gonna try to zoom in so we can see the whole picture right here. You can see the inverse head and shoulder right here, neckline was being broken right here, then we have a massive rally upward right here. So let's try and zoom in once again. Okay, good right now. So what can we figure out right here on this currency pairs? We can see after we first break out right here, price made the rejection, and I discussed this with the VIP members. I said the rejection bar which carved right there is not my kind of price action signals. I can see a very strong rejection bar right there, so I wouldn't want to long the gold right now at the moment, unless if you want to go into swing trading. As a swing trader, the best zone to implement your stop loss right there, if you want to take this trade right there, to be at this swing of trend right here. So if you want to day trade this, not going to swing trading, then I don't think this is the right best signal bar. This is what I discussed with the VIP members. And then we can see how price actually made a rotation upward. Then we had another massive bearish retest again. Even though if you long the gold right here, if you have your stop loss at the right zone below the swing of this retest right there, you will still be caught out of this trend. You will still get along with the trend. So that is one of the importance of having your stop loss at the right zone, not where you wish to get out, but at the right perfect price action zone, whereby price now carved a strong bullish price action signal. We can see that right there, which engulfs all the total bars formation right there. And then let's navigate back on the weekly and the monthly chart so we can see the whole pictures of the gold. So here back on the weekly chart, we can see the swing low right here, key level right there, rejection upward, and then we have a series of rejection right there, whereby we can actually call this bar formation which occurred right here as a double rail bar. Whatever name you call it doesn't matter. The most important, the significance is to know the technical implication. So, and then we can see the previous week actually carved a rejection bar which seems like a bullish pin bar, and the last week was a bullish week. So let's navigate on the monthly chart so we can see what actually happened as well on that is the month of June, and the previous month that was May. So here is the monthly chart of the gold, and we can see right here, remember what I always emphasize on. I say whenever a doji carved is being carved on the chart, whenever price close above the high swing, it's a strong indication of a more bullish trend rally to come, and if price close below the low swing, it's a more indication of bearish trend still to come. And we can figure out right here how price carved a doji right here, and then another long-legged doji right here. You can call this maybe a high wave, and it's also a variation of a doji bar formation. And we can see how there was an April bar failed to close above this doji or high wave bar right here, and then there was a month of May closed above it, and then the month of June is trying to do what? To carve a bullish engulfing bar to the month of May. So if the month of June can definitely ensure a bullish bar, then this would aid to more aggressive bullish rally of the gold in the year 2020. Take note, the next key level resistance comes in at the price level of 18,000. That is 1795.309. That's approximation of 18,000. So don't be surprised if gold hit the price level of 18,000 this year and even skyrocket break above to the next key level structure. So I'm gonna zoom in right now so we can figure out the next key level structure right on the gold. So here it is right here. If price can break out of this key level structure of the price 18,000, then the next key level structure to watch out for will be the highest peak of the historical record of the gold, and that is a key level structure of 19,007.198. So at this level right here, price can definitely have a state of hindrance, whereby this zone right here can actually maybe result gold into a double top formation right here, or maybe gold can definitely break out to carve another swing high in its historical record. So let's check back on the daily time frame of the gold. Back on the daily time frame of the gold, so nothing is impossible in the market, as price have carved a bullish engulfing bar right now. This is not a guarantee. This is actually gonna move up to the price level of 18,000. The market is the master of all. So if the bulls failed to defend this key level structure, whereby the bears comes in next, you can then make a rotation downward, have a close below this key level structure of 1,748.515. Then don't be surprised, this breakout right there is actually turning into what? A false breakout, which means the bears are willing to pull up price downward. And they take note, the next level structure is going to come in, that is a right shoulder of the inverse head and shoulder right here. So the bulls have to defend this key level structure, which acts at the price level of the 1,720. Failure for the bulls to defend this key level structure, then don't be surprised if the price of the gold drastically depreciating the value to the next key level structure, which acts at the 1,682.156, which is a major key level structure, very strong key level structure. So guys, that is all I have for you on the gold. If you haven't joined my free forex trading class, 3 times in a week I do hold free forex trading webinar. Click on the link at the bottom of this video so you can get access to that class. In this class, you have access to hacks to ask me questions directly. And then if you are looking out for reliable VIP membership room, whereby you can get trading signals from me, what I do in the market, how I execute my trade, there's as well a link at the bottom of this video. Check on that link so you can become a VIP member today, so you can get access to quality trading signals from me every day, every week. So make sure as well you have a trading rules which can guide your trading activity in the market. And then do not forget to like, share, comment, subscribe to this YouTube channel for more educational content of this kind. Do have a wonderful weekend. Peace.